Welcome to a shift of the global hegemon, a process that happens once a century. The last time was when the dollar replaced the British pound after World War II. Now it's the yuan's turn. And the scariest part is that it's happening right now, quietly, unnoticeably, irreversibly.
To understand where we are going, we need to understand where we came from. 1944, Bretton Woods. The World War is ending. Europe lies in ruins. Japan has been bombed to the ground. Britain is buried in debt. The Soviet Union is buried in bodies. Only one country came out of the war richer than it went in, the United States. America controlled 70% of the world's gold. Its factories were the only ones left standing. Its army was the strongest on earth. There was no real choice. The world agreed. The dollar would become the global reserve currency, pegged to gold, $35 per ounce. All other currencies would be pegged to the dollar. This gave America an unbelievable privilege. It could print money, and the entire world would accept it as value. The French called it an exorbitant privilege. 1971. Nixon cuts the dollar loose from gold. From that moment on, the dollar is backed by nothing except faith in the American government. And yet the world keeps accepting it. Why? Because of oil. 1974. The United States strikes a deal with Saudi Arabia. The deal is simple. The Saudis sell oil only for dollars. In return, they get American military protection. The petrodollar is born. From that point on, every country in the world is forced to hold dollars. Not because they love America, but because without dollars, you cannot buy oil. And without oil, an economy does not function. For 50 years, this system worked. For 50 years, America printed money and exported inflation to the rest of the world. For 50 years, the world paid for American prosperity, but nothing lasts forever. By January 2026, U.S. government debt reaches $38.5 trillion. Gold breaks above $4,600 per ounce, an all-time high. The world is nervous, and for good reason. Beijing, a closed-door meeting of the top leadership, 2015. One question on the agenda: how do we break free from dollar dependence? China holds $4 trillion in foreign currency reserves, almost all of it in dollars and U.S. treasuries. It is a trap. If America decides to freeze those reserves the way it froze Iran's, the way it later froze Russia's, China loses everything. Trillions vanish with the stroke of a presidential pen. The solution is to build an alternative, slowly, carefully, quietly, so America does not notice until it is too late. Step 1. Trade in Yuan. China begins offering its partners trade settlements in Yuan. Russia agrees first, already exhausted by sanctions. Then Iran, Pakistan, African countries where China is building roads and ports. By 2024, 30% of China's trade is conducted in Yuan quietly, almost invisible in American headlines. Step 2. An alternative to SWIFT. SWIFT is the nervous system of global finance. Nearly all international transfers pass through it, and it is controlled by the West. Being cut off from SWIFT is financial death. Iran knows this. Russia learned it. China builds SIPS, its own payment system. By 2024, it includes 1,400 participating banks in 80 countries, processing around $14 trillion per year. It is not yet a replacement for SWIFT, but it is already an alternative. Step 3. Gold. China buys gold aggressively. Official reserves stand at about 2,200 tons. But experts believe the real number is closer to 5,000 to 7,000 tons. China does not report honestly. Why gold? Because it does not depend on anyone's politics. It cannot be frozen. It cannot be disconnected from SWIFT. It cannot be printed into worthlessness. Gold is insurance in a war against the dollar. Step 4. The digital yuan. While America argues about whether it even needs a digital currency, China already launched one. The digital yuan has been operating since 2022. 260 million users. The digital yuan can be transferred without SWIFT. Without American banks, without Washington's permission, this is a weapon of the future. Year 0, the point of no return, March, Saudi Arabia. Crown Prince Mohammed bin Salman welcomes Xi Jinping with unprecedented honors. 3 days of talks. The world speculates about what they are discussing. Then comes the announcement. The Kingdom of Saudi Arabia and the People's Republic of China have agreed to conduct bilateral oil trade in yuan. 1 paragraph, 9 words. The end of American hegemony. Why is this so important? Saudi Arabia is the largest oil exporter in the world. For 50 years, it sold oil only for dollars. That was the foundation of the petrodollar, the foundation of the entire system. Now that foundation is cracked. The first hours. Markets in shock. The news hits Bloomberg terminals at 6 in the morning Eastern Time. Asian markets are already closing. Europe is just opening. The first reaction is disbelief. This is a bluff. They won't dare. America won't allow it. But the Saudis are not bluffing. They are tired of America. Biden called them pariahs. Congress threatened sanctions over the Khashoggi killing. The United States pumps its own oil now and no longer depends on the Middle East the way it used to. Why would the Saudis need America if America no longer respects them? China is the largest buyer of Saudi oil, about $50 billion per year. China does not lecture about human rights. China does not threaten sanctions. China pays and stays quiet. The choice is obvious. The first week, the domino effect. Other countries watch Saudi Arabia closely. If it dared, that means it is possible. The United Arab Emirates follow 3 days later. They call it diversification of trade relations. Kuwait joins a week later. Iraq follows after 2 weeks. They care especially little about America after 2003. Russia is already trading in yuan and rubles. After its reserves were frozen in 2022, it had no other choice. By the end of the first month, 35% of global oil is sold outside the dollar. 1 month earlier, it was 8%. The dollar reacts. The dollar index, DXY, falls 12% in a single month. That is massive. Normally it moves 5 to 7% per year. But this is not panic. Not yet. This is repricing. The market is recalculating what a currency is worth when global demand for it declines. The answer is simple. Less. Gold rises from $4,600 to $6,000 per ounce. The yuan strengthens by 8%. Bitcoin jumps 40%. People are looking for alternatives to the dollar. Any alternatives. Months 1 through 3. America wakes up. The White House, an emergency meeting of the National Security Council. The president is furious. How did we let this happen? Where was the CIA? Where was the State Department? The answer is grim. This was prepared over decades, right under their noses. They were too busy with Ukraine, Taiwan, and domestic politics. The response options. Option 1. Military pressure. Send the fleet toward Saudi Arabia. Remind them who protects them. The problem? The Saudis have already agreed on military cooperation with China. Chinese missiles in the desert. A war with Saudi Arabia is a war with China. Option 2, economic sanctions. Freeze Saudi assets in the United States. The problem? The Saudis are already pulling their money out. And if their assets are frozen, every country in the world will understand one thing. Storing money in America is dangerous. The flight from the dollar accelerates. Option 3, accept and adapt. Politically impossible. No president can openly admit the loss of hegemony. It is electoral suicide. America chooses the worst option. Aggressive rhetoric without real action, threats that are not enforced. This signals weakness. The Federal Reserve panics. The Fed faces an impossible choice. The dollar is falling. To support it, interest rates must rise. High rates attract capital, but high rates kill the economy. Mortgages become expensive. Companies cannot borrow. Recession follows. The Fed chooses to defend the dollar. Rates rise from 5% to 8%, then to 10%. It helps the dollar, temporarily. But the American economy enters a downward spiral. The housing market collapses. No one wants a mortgage at 12%. Auto loans become inaccessible. Small businesses go bankrupt in waves. By the end of the third month, unemployment jumps from 4% to 9%. A recession is officially declared. And the dollar keeps falling anyway. Because the problem is not interest rates. The problem is trust. The world no longer believes in the dollar as an unconditional store of value. Months 4 to 6, the Allies scatter. Europe, between a rock and a hard place, Brussels, an emergency EU summit. Europe is terrified. For decades it was part of the American system. The dollar, NATO, shared values. Now the system is collapsing. What to do? France wants independence. Macron has long spoken about strategic autonomy. Now people are listening. Europe must trade with China in euros. Not in dollars, not in yuan, in euros. Germany is in panic. Its economy depends on China, its largest trading partner, and on the United States, its main military protector. Choosing a side means losing half of everything. Eastern Europe, Poland, the Baltics, clings to America. They fear Russia more than economic collapse. There is no unified position. The EU is paralyzed. Meanwhile, European companies quietly switch to yuan in trade with China, not because they love China, but because it is cheaper. Lower transaction costs, less risk of sanctions. Volkswagen, Siemens, BASF, Airbus, giants of the European economy, all trade with China in yuan. By the end of the 6th month, 40% of EU-China trade is in yuan. A year earlier, it was 4%. Japan, loyalty until death. Tokyo, America's most loyal ally. Japan holds $1.1 trillion in U.S. treasuries, more than any other country. Those bonds are melting before their eyes. The dollar falls, the bonds lose value. Japan loses $20 to $30 billion every month just by holding American debt. The Ministry of Finance panics. Sell or hold? If they sell, it hurts an ally and accelerates the dollar's fall, which hits the remaining bonds. If they hold, the losses continue. Japan chooses a compromise. Slowly, quietly, sell. 3 to 5% of the portfolio per month. so the market does not notice, but the market notices everything. Bloomberg writes, Japan dumps U.S. treasuries. Panic intensifies. And the ones celebrating are developing countries. For decades, they suffered under the dollar system. Their debts were in dollars. Their exports were priced in dollars. Any dollar strengthening meant crisis. Now the dollar weakens. Their debts are easier to repay. Their goods are more competitive. And most importantly, they now have an alternative. China offers trade in yuan, loans in yuan, investments in yuan, without lectures on democracy, without demands for structural reforms like those of the IMF. Indonesia switches to yuan in trade with China. Malaysia, Thailand, Vietnam. Africa, an entire continent, turns toward China. Nigeria, Egypt, South Africa, Kenya, all sign yuan trade agreements. Latin America follows. Brazil, Argentina, Chile. The map of global trade is being recolored before our eyes. Months 7 to 9. Economic war. America strikes Washington can no longer stay silent. Action is needed. Any action. First strike, tariffs. 200% duties on all Chinese imports. Everything from smartphones to socks. Result, prices in American stores explode. An iPhone costs $2,000. A television, $3,000. Clothing doubles in price. Americans are shocked. Inflation, already high, surges to 25%. Second strike, technological blockade. A total ban on exporting chips, chip-making equipment, software, anything, to China. The goal? Strangle China's tech sector. Result? China accelerates domestic production. Yes, their chips are worse, but they exist, and in 3 to 5 years they catch up. Meanwhile, American chip makers, NVIDIA, AMD, Intel, lose their largest market. Their shares fall 50%. Layoffs, bankruptcies. Third strike, asset freeze. The United States freezes all Chinese state assets. $800 billion. This is the nuclear option. Confiscation of a sovereign state's property. Result, the world is horrified. If America can seize Chinese money, it can seize anyone's. The flight from the dollar turns into a panic. Central banks around the world dump U.S. treasuries. It's better to lose 20% now than 100% later. China responds, Beijing does not intend to suffer in silence. First response, rare earths. China controls 60% of mining and 90% of processing of rare earth metals. Without them, there are no electric vehicles, smartphones, wind turbines, or modern weapons. Exports of rare earths to the West stop. Completely. American and European factories shut down. Tesla cannot produce cars. Apple cannot produce iPhones. Lockheed Martin cannot produce missiles. Second response, the debt bomb. China still holds U.S. treasuries, about $700 billion after partial sales. China dumps everything at once. The bond market collapses. Yields explode. The U.S. government must pay 12% annually on new borrowing. With debt at $38.5 trillion, that is nearly $5 trillion per year just in interest, more than the entire federal budget. Third response, alliance. China, Russia, Iran, Saudi Arabia, India, Brazil announced the creation of a new economic order. A trade system without the dollar, without SWIFT, without Western banks. This is not BRICS, a talking club. This is a real economic bloc with $40 trillion in combined GDP. What happens to ordinary people? In America, a catastrophe. Not instant, creeping, but no less terrifying. Inflation at 30% annually. A salary that seemed normal a year ago is now poverty. $60,000 a year used to be middle class. Now it is survival. Shortages. For the first time since the 1970s. Store shelves empty. Not everything, but much. Electronics. Medicines. Car parts. Everything made in China. American factories cannot replace imports quickly. It takes years to build production. But goods are needed now. Unemployment at 15%. Companies dependent on imports or exports to China collapse. Walmart, Target, Amazon lay off thousands. The social fabric tears. Crime rises. Drugs. Homelessness. People who lost jobs and hope sink to the bottom. Suicides are 40% higher than a year ago. An epidemic of despair. In China, also difficult, but manageable. Export industries suffer. Factories serving America close. Millions lose jobs. But the government redirects the economy. Domestic consumption. Trade with non-Western countries. Infrastructure projects. China has what America does not. 1.4 billion consumers at home. A massive internal market that can replace the West. The Yuan strengthens. Chinese citizens become richer in real terms. Imports get cheaper. Foreign travel becomes more affordable. Yes, not everything is smooth. Yes, there are problems. But China does not collapse. It adapts in the rest of the world division. Commodity exporters prosper. Oil, gas, metals, food. Everything rises in price. Saudi Arabia, Russia, Brazil, Australia, Indonesia, their currencies strengthen, their budgets run surpluses. Import-dependent countries suffer, especially poor ones. Sri Lanka, Pakistan, Egypt, parts of Africa. Inflation, hunger, instability. Governments fall. Europe is in recession. Not as deep as America's, but painful. Unemployment at 12%. Social protests. Right-wing parties gain strength 9 months. The world is split in two. The American bloc, the United States, Canada, Britain, part of Europe, Australia, Japan, weakened but still alive. The Chinese bloc, China, Russia, most of Asia, the Middle East, Africa, Latin America, growing, confident, hungry. Between them, a cold economic war, sometimes hotspots. How does this end? Who wins? And can anyone really win such a war? Years 2 to 3, stabilizing the chaos. The United States is no longer the hegemon, but it did not collapse. It did not fall apart. It did not turn into a third-rate country. America is still the largest economy of the Western Bloc, the most powerful military, the best universities, a world-class innovation ecosystem, but the privileges are gone. The dollar has stabilized after losing about 45% from its peak. It is no longer the world's reserve currency. It is one of the major currencies, on par with the Yuan, the euro, and gold. The economy has restructured, painfully, with friction, but it has restructured. Imports were cut in half. Americans no longer buy Chinese goods. They're too expensive under tariffs and a weak dollar. At the same time, American manufacturing is reborn. Factories return from China. Not all of them, but many. Industrial jobs grow for the first time in 40 years. This is not the golden age of the 1950s. American goods are more expensive and often worse than Chinese ones, but they are domestic, and they exist. Living standards fell by about 25 to 30%. The average American now lives the way people lived in the early 2000s, not poverty, but not the prosperity people were used to. Fewer trips abroad, fewer imported goods, less consumption on credit. America becomes a more normal country, rich, but not exceptional. China, the burden of leadership. The yuan has become the main trade currency of the world. About 40% of global trade is in yuan. The dollar is about 25%. The euro, about 15%. The rest is gold, cryptocurrencies, and local currencies. But leadership is not only privilege, it is responsibility, opening the economy. For the yuan to become truly global, China is forced to loosen capital controls. Before, money could not leave China without permission. Now it can. This creates risks. In a crisis, capital can flee. A strong yuan hurts exports. Chinese goods become more expensive for foreigners. Factories in coastal provinces close. Workers protest. The government restructures the economy toward domestic consumption, more social programs, more infrastructure in inland provinces, less dependence on exports. It works, but slowly and painfully. Political pressure increases. Before, China could ignore global opinion. Now it cannot. Countries holding reserves in yuan want a voice. If you want us to trust your currency, be predictable. Do not change the rules on the fly. Respect contracts. China is learning to be a responsible hegemon, not always successfully, but it is learning. The main result is clear. The world is no longer unipolar, and not bipolar like during the Cold War. It is multipolar. 3 centers of power. The Chinese bloc, China, Russia, Iran, Central Asia, most of Southeast Asia, the Middle East, Africa. Trade in yuan, security guaranteed by China and Russia. The Western bloc, the United States, Canada, Britain, part of Europe, Australia, Japan, South Korea. Trade in dollars and euros, security through NATO, weakened but alive. The non-aligned, India, Brazil, Mexico, Turkey, part of Europe. They trade with both blocs. They balance between power centers. They profit from competition. This is not a new Cold War. The blocs trade with each other. Tourists travel. Students study abroad. But there are borders. There is tension. There is competition. Globalization did not die. It split. There is no longer one dominant currency. There is a basket. The yuan is the main trade currency, about 40% of global trade. The dollar is the currency of the Western Bloc, about 25%. The euro is Europe's regional currency, about 15%. Gold returns as a reserve asset. Central banks hold about 20% of reserves in gold, compared to about 10% before. Digital currencies are growing. The digital yuan, the digital euro, cryptocurrencies, around 5% and rising. This system is more complex than dollar hegemony, but it is more stable. No single country can abuse its currency. Alternatives exist. CIPS Plus, the Chinese payment system, is a competitor to SWIFT, about 3,000 banks, 150 countries. The Asian Monetary Fund is an alternative to the IMF, loans without structural reforms and political conditions, popular in developing countries. The Shanghai Gold Exchange is the largest in the world. Gold prices are now set in Shanghai, not London. The BRICS New Development Bank is an alternative to the World Bank. $100 billion in capital, infrastructure projects across the global south. Western institutions, the IMF, the World Bank, SWIFT, still exist, but they are no longer monopolies. They have competitors. What this means for ordinary people, if you are in America, life has changed, not catastrophically, but noticeably. Goods are more expensive. Everything that is imported, and that is a lot, costs about 40 to 50% more than before. Get used to American brands. They are not always as good, but they are available. Foreign travel is a luxury. With a weak dollar, a vacation in Europe or Asia costs about twice as much. Americans rediscover their own country. Jobs exist, but they are different. Fewer office positions, more manufacturing, construction, manual labor. For some, this feels like a step backward. For others, it is a chance. Savings in dollars have lost about half of their international purchasing power. The lesson is diversification. Gold, euros, cryptocurrency are not paranoia. They are common sense. If you are in China, life has improved. For most people. The Yuan is strong, imports are cheap. German cars, French wine, American movies are more affordable. Travel is booming. Chinese tourists are everywhere. Their currency is welcomed. But export regions suffer. If you worked at a factory producing goods for America, your job is at risk. Relocation to inland provinces. Retraining, not everyone manages. Political freedom did not increase. Economic power did not bring political reform. The party controls everything just as tightly, possibly even more tightly. If you are in the rest of the world, it depends on where you are. Commodity exporters, Saudi Arabia, Russia, Brazil, Australia, are doing fine. Their goods are in demand. Their currencies are strong. Manufacturing countries, Vietnam, Indonesia, Mexico, are thriving. Production leaves China because it is too expensive and moves to them. Poor countries without resources face the hardest path. No cheap dollar loans, no cheap imports. They must choose a bloc and follow its rules. Europe is between two worlds. It trades with both. It tries to preserve autonomy. With mixed success, lessons for everyone. Lesson 1, nothing is permanent. The dollar seemed unshakable. 80 years of hegemony, everyone got used to it. But the British pound once seemed eternal too, and Spanish silver, and the Roman denarius. Currencies come and go. Empires rise and fall. This is not a catastrophe. It is history. Those who understood this early prepared. Those who believed in the eternity of the dollar lost. Lesson 2, diversification is not paranoia. Do not keep everything in one currency. Do not keep everything in one country. Do not keep everything in one form. Dollars, euros, yuan, stocks, bonds, gold, real estate. Skills, education, connections, spread risk. It is the only protection against a future no one can predict. Lesson 3, skills matter more than money. In a world of unstable currencies, a person with in-demand skills survives better than a rentier living off a deposit. Doctors are needed everywhere. Engineers are needed everywhere. Programmers, mechanics, farmers, needed everywhere. Money can lose value overnight. Skills do not. Lesson 4, geography matters. Where you live matters more than ever. A resource exporting country, you are lucky. A country with a strong economy and a neutral position, good. An import-dependent country without resources, tied to a losing bloc. Think carefully. Mobility is an advantage. A second passport is not a millionaire's whim, it is insurance. Lesson 5, history continues. The yuan replaces the dollar, but this is not the end. In 50 years, something will replace the yuan. Maybe a digital currency, maybe something we cannot imagine. Maybe gold returns again. The only constant is change.
A shift of the global hegemon is not an apocalypse. It's not the end of civilization. It's not even the end of America or the triumph of China. It's simply history. Britain survived the loss of the pound's hegemonic status. It remained a wealthy, influential country, just not an empire. America will survive the loss of the dollar's hegemonic status. It will remain a rich, strong country, just not an exceptional one. China will inherit the burden of leadership, and it will learn that this burden is heavy. And the world will become more complex, more multipolar, less predictable. This is neither good nor bad. This is reality. The question is not how to stop change. The question is how to adapt. How will you, personally you, live through this shift of eras? What will you do today to protect yourself tomorrow? This is not a rhetorical question. It's the most practical question you can ask yourself. Because history does not wait. It is happening right now.